without further ado, let's get started. And we're going to talk Rip Van Winkle. Imagine this is the guy that falls asleep and he wakes up in 2030. He wakes up and he realizes that financial services has been completely disrupted by embedded finance. Is he able to find his credit union when he wakes up? I don't know. So at this time, I'm going to welcome to the stage our panelists, Brian Kaas from TruStage Ventures, Elissa McCarter-Laborde from World Council, Ron Araujo from Mission Fed Services, and George Estrada from AWS. Please join us and let's go.
So building on Zach's story, so Rip Van Winkle, we're going to kind of play that out. Imagine it's the year 2030, and I was going to try to grow my beard out, but I started about 6 years and 11 months too late. So again, we kind of stumble out onto the strip. It's the year 2030. Republicans are still trying to elect the House Speaker. That hasn't been resolved. Taylor Swift actually is the leading candidate for president with her new party, the Swifties. And Neuralink. Is everyone familiar with Neuralink? That's Elon Musk's company that is basically implanting chips into people's brains to allow them to control computers with just their thoughts. Well, guess what? Did you know that they got clearance just last month to start testing that on humans? So we'll fast forward. So now we have tens of millions of people walking around these chips in their head, controlling their computers and everything else with just their minds. Then we kind of look at what's happening with AI and how that's impacting credit unions and banks. And so we walk into the local branch. There's really only like 2 or 3 people there because branch traffic is down 75% because AI has done so much around automation. So credit unions are really kind of trying to find out how are we going to engage with members if they're not coming into the branch to interact with us. And then we see this new concept of embedded finance. And Rip asks, what is embedded finance? I don't even know what that term means. Well, embedded finance is where you have non-financial companies getting into the business of offering financial services. And by the year 2030, it's kind of proliferated the landscape. We have embedded finance growing from about $50 billion in 2023 to some estimates to $2 trillion by the year 2030. Walmart has an online car buying program. Let's fast forward to where that goes in 2030. And they now are the largest auto retailer in the United States, second only to Costco. And they're capturing all the financing of those auto loans. Apple has launched their high yield savings account in September of 2023. Let's fast forward 7 years, and Apple has now grown to $250 billion of deposits, surpassing the largest credit union in the United States. The big 3 automakers follow Tesla's lead, and they start selling cars direct to consumers. And they're selling most of those vehicles online. And guess what? They're also trying to capture all of the financing on those vehicles. SoFi partners with TikTok and Snapchat to capture 20% of the banking services and lending to people 30 years of age and younger. And Amazon, through its partnership with a firm, has expanded beyond buy now, pay later to offer checking, savings, and more traditional loans at the time of checkout from Amazon. Sound pretty grim? Well, okay. Way to bring the crowd down, Brian. I think that is not probably that unrealistic for at least some of these things to come true. But I think, what we're doing at TruStage Ventures is we're trying to find and invest in companies that are the technology that's enabling that embedded financing to occur. And we want to find ways to really kind of bring the credit union system and become players in that embedded finance ecosystem. And I think that is going to be absolutely critical for the survival of this industry. And not only can embedded finance, enable us to survive. I mean, it can be the way that the industry thrives. To Sue's point, it's a way that we can reach out to serve more members than ever before. We've invested in a company called CarSaver. CarSaver's powering that online auto buying platform for Walmart. And we want to leverage really the power of the credit union industry to enable credit unions to provide loans on cars sold through that platform. CarSaver's also powering the online digital experience for Nissan. So again, with those car dealerships going online, it's through a partnership like CarSaver that we can really get credit unions at the forefront of those loans. Union Credit's another company that has created a marketplace just for credit unions. That is, they're embedding their technology on Experian, Way.com, Bankrate, and they provide pre-approved credit union loan offers to millions of consumers. And within the first 8 hours of Union Credit launching just last week, they created 1,500 new credit union members in a little over 8 hours for those credit union partners. So I think, the questions that I have really for the panelists here and for the audience is, are we, one, willing and comfortable sitting behind the brands or sitting alongside the brands that are out there that are going to become more and more relevant when it comes to embedded finance? The Amazons, the Walmarts, your local merchants. Doesn't all have to be big retailers. You can partner with your local merchants and retailers to find unique embedded financing solutions. I think, are we willing to collaborate on a level like we've never done so before? I think the credit union industry, to its credit, is great at collaboration. To its detriment, we're great at collaboration. We tend to love to talk and get together, but we need to be able to come up and agree on solutions, and we need to do so quickly. And I think we need to really kind of look at reinventing how the industry collaborates so that we can bring the power of the industry to these big partnerships, because even the largest credit unions in the country are still not large enough for some of these partnerships to do it on their own. And I think, lastly, are we willing to really prioritize fintech partnerships? Because I think it's, through the technology that will really be critical to empowering credit unions, to allow us to stay relevant, to deliver the experience to our members that are expected, and to be really a major player in this world of embedded finance that, again, I think has the potential to disintermediate traditional financial institutions in a way that will kind of dwarf what some of the direct-to-consumer fintechs have done. So with that, I want to know what our panelists think. And so, Elissa, I'll let you go next and introduce yourself, and we'd love to hear if you think we're have a bright future ahead, or if Rip Van Winkle should go back to sleep in the year 2030.
Good morning. So 2030, looking back, I would argue that embedded finance is actually the natural evolution of financial services that reach customers who haven't really been reached very well by the system, by the financial system. And if Vikas Raj were here, and I'm sorry he wasn't able to be here, Vikas and I we co-teach a class at Johns Hopkins on financial inclusion and inclusive fintech. And I know Vikas would argue that it's not so much a financial service embedded into another offering, but it's having a financial service that is a frictionless tool that allows someone to really maximize the economic value of the good or the service that they're trying to have. And so if we step back, what credit unions should be looking at globally, and that's my focus, is how do we create frictionless opportunities using platforms and data and this latest technology that is truly a natural evolution of financial services in a way that allows us to reach customers that we haven't really been reaching. So that's my first point. My second point would be, consider this. We just got the statistics in through the World Council's annual statistical survey that we put out every year. And 404 million people are reached through credit unions around the world, roughly 100 countries. That's a value of roughly $3.6 trillion. That's 60% of those customers in developing countries and emerging markets. And yet, if you look at the estimated SME credit finance gap globally, that's roughly $4.5 trillion of a gap in credit financing for small business that still exists. So even if we doubled the asset base of credit unions globally, we're not reaching the number of small business owners that get consumer financing maybe. Banks don't really go down there. You've got some platforms that are doing it but don't really have a balance sheet to do that on a big scale. So why aren't we serving and identifying markets where we can grow? That would be my second point. I come from a family of a large extended family in South Carolina, every single one of whom is a small business owner, an entrepreneur, working class, that have never had a loan from any financial services provider for their business. Why is that? Why is banking still so difficult? And why is there a lot of friction? So when I look ahead, my third point would be, we have to really look at what is embedded finance offering. And that is the ability to reach people who haven't really been able to make money work for them. And that's what credit unions should be doing. So if I look at 2030 and I look at the US credit union industry, I don't want to see that shrinking. I want to see that growing, like what we see in Brazil and Philippines, for example. They each added over 2 million customers last year alone. And so they're reaching young people. They're looking at small business owners. They're looking at, if we turn it inward, the immigrant population, small business in the US that are growing segments. So we can't ignore, even with the competitive threats that I think are going to play out with the big players you just mentioned, what happens with fintechs that will continue to innovate, some of the regulators that are still watching what's going to happen, some of the latest incidents like Synapse, if you've read Synapse and Evolve Bank, that's sent some shutters through the fintech investment world, which Kaas also shared with me. I think that's ultimately where we have an edge. We have balance sheets, we have regulations, we have an ability to partner, I agree, but we have to not be stuck in the same kinds of products and customers we've been serving for the last decades. We have to look at where the growth opportunities and then use the tools now available through technology to be able to reach them. And so in 2030, I think hopefully we'll see the US credit union industry still leading. And if not, it'll be following. Because I think that's what we're doing at World Council through how do we create engagement for the US to learn from other countries. That's why through the Worldwide Foundation, we offer Global Bridges as an engagement opportunity to share lessons and learn from what other country credit union systems are doing and why they're growing and we're not. And so I really think there's an opportunity to keep learning and keep having this conversation. But it is ultimately what is the right question, and I think that's how are we creating tools that allow people to have a better suite of financial products that work for them.
Great, thanks, Elissa. Ron, your thoughts on embedded finance?
Yeah, great. I'll be honest. When I walked up those stairs, I was very much happily ever after. After Brian and Elissa's comments, I'm actually even more happily ever after, to tell you the truth. And I'll tell you why. Because let's go to Brian's comments first. He's outlined a lot of issues that are out there. So these are known issues. In fact, I'll make your scenario even worse. Who here thinks that they will be keeping their doors open in their credit union in 2030 by continuing to make car loans to people with 750 FICO scores? Raise your hand. I can make a pretty strong case that right now car ownership is at its peak. I don't think people are even going to own cars 7 years from now. There'll be a significant number of people that don't own cars. That changes a lot of things. It changes a lot of things for credit unions. But the one thing we do really well within ourselves is represented right here. We collaborate. Everything that Brian's talked about is known, and we can tackle it. I believe we'll survive it. I know we'll survive it, but it doesn't matter if only one person believes that, right? We all have to believe that we can go forward and we have to make these changes, right? We all have the same goals, but we still continue to just work at half measures in so much of what we do. You know, someone told me that I worked for a long, long time ago said, you know, 95% of what we did last year, we're going to do next year. That's no longer the case. That's a recipe to continue to shrink and shrink and shrink, and then, you know, all of a sudden you're part of a credit union that's over 10 billion. But I think that knowing these things is helpful, right? Knowledge is power. And there's ways to tackle every single thing that Brian talked about. World Council does a fantastic job of bringing these things forward. I know because my board goes to Europe every other year to attend the entire thing, and they bring back a lot of information for me. But there's a growing market there too, right? And we don't have to increase our field of membership to the Philippines to take advantage of it. We can make investments in companies and in financial technologies that are generating revenues that we can participate in that are doing this over there. That are becoming very, very much collaborative kind of on a global basis. So if we want to do this and it becomes important, it's going to get done. There's nothing that hasn't been important to the credit industry that has not gotten done. Our own journey with respect to embedded finance, like a lot of credit unions, came about in looking at the opportunities that are out there in financial technology. You know, I used to kid that the credit union industry was run by, you know, 5 or 6 oligarchs, and then we had these kind of non-collective voices, and whatever product came up, we went ahead and went with it. Well, now we have an opportunity to invest in those and actually shape these. I actually sit on the investment committee for the Circle Fund, and one thing, the biggest advantage of being part of the Circle Fund isn't the fact that you're going to get this great return on your money, but you're going to catch companies when they're early on in their development, and they're going to give a presentation to 100 credit unions, and they're going to say, what does this have to look like for you? They're not going to come to you after it's been developed by somebody large out there and say, hey, you can pick between these 3 models, but we can't really tweak it. And if you want anything else done on it, we'll put it on the roadmap, and you'll come back in 5 years and say, what about, you know, text messaging? Well, it's still on the roadmap. You get to do this because you're in the boardroom in many of the cases here. You have the opportunity to do this. So we have an expanding market opportunity. We have known problems that are out there that are probably even worse than that, right? But if we take a solution-based approach to this, we can actually thrive during this time when others don't thrive during this time. And you don't have to, you know, so much about technology, which is really what's going to drive our success here, is about, you know, it becomes so impersonal, or my members, they just want to talk to a live person. Your members don't even know if they're talking to a bot most of the time, if they're talking to a bot. You're going to call some company, you don't even know it. And the technology is so good that it's designed to solve that problem. So you have opportunities to do this and get engaged. And, you know, we think about the markets right now. I saw the grim hands go up when, yeah, the economy's kind of tough right now. There's a lot of things kind of working against us. But we're a pretty insular group here, and credit unions are healthy. Credit unions are thriving. Credit unions have the wherewithal and the capital to be very, very successful if we deploy it efficiently. And I'm it's not so much optimistic that we can, but I work on a regular basis as president of our CUSO that does a lot of fintech investing. I work on a regular basis with other like-minded CUSOs that are out there. These things are already happening right now. It's not like we're going to, okay, now we're going to start making investments in companies and we're going to stub our toe. We've already stubbed our toe so many times, and we'll continue to do that. But you get up and you just keep going forward, and I just can't. I just can't follow the string that we're not going to be successful. I'm certainly willing to listen, though, because that's how we get to the root of problems and we continue to solve them. Thanks.
Ron, appreciate the enthusiasm and the energy and the wisdom here. A lot of great advice to the audience. We'll close with George. So George is with AWS. George is our entry point into building the partnership with Amazon for credit unions. So I think we can check that one. We've got that one underway. But George, why don't you share your thoughts?
Sure. So good morning, and thank you, Sue, for the opportunity to speak again. I'm going to do what Sue likes me to do. Ron, I'm going to push on something you said a little bit. As a technologist, 2030 is grim if we focus only too much on the technology, right? Like, you know, when you mentioned folks don't even know if they're talking to a bot or not, right? So I think that is really what we need to focus. Who's going to own that relationship, right? It is, at the end of the day, I'm a technologist at heart, but who's going to own that relationship? Is it the third party that's embedding these financial services? Is it the credit union? And it's like, that's where we got to keep our eye on the ball. You know, there is, I love the grim fairy tale. I think that myths and stories are very powerful tools that have been around for thousands of years, for as long as humans have been around. You know, and this is like a hero's journey. I believe there is a happily ever after, but let's not forget that you don't get there without the grim part of it, right? You have to go through that trial and error. And that's where we are now. Credit unions, I feel, are trying to find their place, are trying to find their identity. You know, young people out there share the same values that credit unions do, right? They're connected. You know, they don't want to work with an organization that doesn't represent their values. What they don't understand is that message of what credit unions represent isn't getting to them. And so they're getting caught up. Amber and I have talked a lot about this. They get caught up in the features. Can I, you know, send a payment to Brian in 2 seconds? They get caught up in the features and lose sight of that because nobody's managing that relationship. And so I want to tie it back to the Rip Van Winkle story. At the end of the day, it's about relevance. Rip Van Winkle was lazy. He went into the woods, ran into a couple of fellas, drank some, moonshine. Powerful moonshine. He knocks out for 20 years. Comes back and he's irrelevant. Everything, his wife passed away, everything's changed. He's irrelevant. And so the question is, the moral of the story there is, are credit unions going to go and, you know, get some moonshine, or are we going to get in there and push back on the technology? You know, again, I am a technologist all the way, but technology is there to assist us as humans, not the other way around. I want that relationship. We should have options to get in there. And what we do is, you know, Amazon has a working backwards process where we start where the outcome is and we work our way backwards. And then it's at the very end that informs what the technology is that's going to solve that. So I think that we can't be shy. You know, we're hearing a day before Money 2020 starts, you know, credit unions over the last couple of years are becoming more and more understanding that they have to partner with these fintechs. Fintechs have the technology, but credit unions have the relationships. And that is the key message here. Let's not become irrelevant. Let's not drink the moonshine. Let's push back. And you know what? It's going to be hard. We're going to argue. We're going to push back. There's going to be a lot of tension, but tension creates, you know, some of the best products you've seen out there.
Yeah, I agree. I didn't see a hard pushback there, but I agree with what you're saying from that standpoint as far as who owns the relationship, right? And I'm not saying blindly we're going to get there and it's going to be, you know, nothing goes from here to here. It's going to be ups and downs and all that, right? I mean, one of my favorite movies is Rocky, and everyone loves a feel-good story about Rocky and how well Rocky still lost the fight. Okay, it wasn't until Rocky 2 he actually won.
Yep.
There's still work to do, and you have to work hard, and you got to change the way you work and change the way you think, and find out what really is important to you. And then, like you said, utilize that technology, but don't just farm it out. That's the point. Is being when you're in the boardroom and you're shaping a product. I think that is the ownership piece of it, right? But again, it's just breaking down kind of the old ways that we think and kind of embracing newer ways. And I just feel like we're going to get there.
Yeah, no, I agree. And I think this is a great time to be in technology. We're doing a lot of work in a lot of areas. The credit union space is incredibly talented. I mean, there's some really creative folks that I've been working with, really hard thinkers, but you know, it's the value system. It's the value system that credit unions bring to the table that you don't see in too many spaces, right? Everybody gets caught up with like, you know, can we be the first? Can we be the biggest? Can we be the fastest? But it's those relationships. So I would say, you know, the relevance of credit unions, I believe, and this is where my happily ever after, I do think that there's going to be a renaissance for credit unions. I think that we're seeing now a lot of acquisitions and so on, but I think that in 10 years' time, we're going to start seeing new credit unions come about. I think that what's going to usher that is the level playing field that the technology, once the technology is normalized, we're going to be back to square one, and there's going to be a lot of interest in forming credit unions that represent niche groups like they did, you know, 70, 80 years ago.
Well, great advice. I want to thank Elissa, Ron, and George for joining the panel here today. And you know, to the audience, I really strongly encourage you to go back home next week when you get your sleep recovery from being in Vegas for however long you're here. But have this discussion, and it can't be just something that's a slide or two during annual strategic planning. Like, we really, as an industry, need to have this be one of the top priorities of how we're going to, you know, make this transition so that we're viable and strong in the year 2030. So with that, thank you so much. We'll turn things back over to Zach.
Yeah, and thank you very much. And we're going to keep things moving. So right now, if you have questions for the panel, come see them out at our networking session here at the end, and we can connect you with them too, and they can give you more. So we're going to keep it on moving. And thank you, panel, so much for joining us.